last session, we discussed in detail about what is wrong with our existing financial system. And from my point of view, it's not just erroneous. In fact, it's like a criminal system that we are a part of, and it has been designed that ways, basically to siphon wealth from the whole world to like centralized systems which kind of control this. And we also talked about how that has like a huge incentive on the part of those who are like organizing that to keep it that ways, and how they would do everything in their power to make sure that it doesn't really change. And yeah, so we kind of covered a lot of that in detail in the last session. This time we want to look at more in terms of like what are the possible solutions. And so in this session, we'll be talking a lot more about like decentralized peer-to-peer systems. But before we go into the decentralized peer-to-peer systems, like talking about like the kind of inflation that is coming, it's basically a function of the crazy amount of money printing that is happening on behalf of these centralized systems. And so what they're essentially doing by doing that is they're transferring wealth from, say, your pocket to their pockets. Now, one of the things you can do, as Prab already mentioned, is something that he's already doing, is like investing in real assets. So land, for example, is a very real asset, and it generates very real value. Like you can plant a tree and then you can eat figs and plums and peaches and pears. And that is something ultimately of the highest value in a sense, right? So that is definitely one of the things that you can do in order to like protect yourself, like invest in real assets, right? And so in that sense, like as I said, land is a very good investment. Apart from that, even gold and silver are things which have held value over thousands of years. So it's also, that's something worth considering. But unfortunately, the problem with that is like they're not very easy for a regular day-to-day transactional point of view. Same problem with land as well. It's like you can't use that, like you can't like sell 0.1% of your land in order to buy like a laptop or something like that. You can't really do that. And the same kind of constraint also exists with gold, because like, okay, now I do have this gold now, but I want to buy like a webcam for myself. Like, what do I do? Like, do I give like a small piece of that? So from a very transactional point of view, then what happens is if we don't have an alternate solution, then we fall back to the same centralized systems of sorts, right? So how can we kind of solve that? Well, there have been people who've been thinking about the same problem for a very long time. And so I think in 2009, this anonymous dude, Satoshi Nakamoto, came up with a possible solution to this problem, right? And so which is where we finally get decentralized peer-to-peer systems which can help us out. Yeah, Romit, would you like to jump in and talk about how this could possibly be a solution to
Yeah,
the problem we have?
sure. Before we go to that, maybe we can mention about another problem that real world assets have faced. For example, yeah, it's awesome to have real estate also, which is a really good, it's a really good investment, or really good asset to hold, because it does have a lot of potential in terms of generating revenue, or growing in value over time. Um, but another aspect about what we missed in the entire scenario, even with which applies even to gold, is the fact that most of these are centralized in a way, right? So what I mean by that is, we went through the concept where gold was mostly held by banks. So banks, being the custodians, had full control over everyone's gold, and they could basically do whatever they want with it. And we saw that bank runs happened when they basically cheated, right? Like they cheated the people by issuing more paper than there was gold. The same problem exists with central banks as well. Now, apart from this, we know that we did go through the agendas that some people do have. Um, Another property that's actually quite important that we are trying to understand now is the idea of actually being able to hold the asset that you own, right? How easy is it to confiscate the asset that you hold? Well, for example, if you hold gold, how easy is it for, let's say, an empire, a king, or a government to take it away from you? And we went through, the Nixon shock, where basically, or even the Bretton Woods Agreement, which was kind of part of that, where the US government basically asked all the citizens to return the gold back, right? So it can be enforced, like basically it can be enforced that if you have gold, well, they could take it away from you. And same thing can actually happen to land as well. If you hold land, well, if the powers that we don't want you to hold land, they could take it away from you. So yeah, so we have come to this weird scenario where we need an asset that cannot be easily confiscated from you, right? So there were a lot of solutions in terms of assets that were tried, as in the digital money form, but they were all also centralized, and they could be shut down by governments, because of course, when you compete with them, they don't really like it, so they will shut you down. So that is where another important aspect that has come out of this entire system is the idea of something being decentralized, which means it's not really in control of someone, where it could just be shut down. So yeah, maybe we could go to the next slide. Okay, so yeah, as Vishnu mentioned, Satoshi Nakamoto came up in 2009. Basically, he released a paper which described such a system. It described a system that basically created a decentralized network that could actually function as a currency, or as a payment system, basically. This system was built, well, the technology that was created was basically, it used a blockchain technology, right? So if you would like to understand what is blockchain, or how a blockchain works, you could think of it as just some data that's being stored, right? But it's being stored in well, anyone can basically participate in it. Like, if it the meaning of decentralization is that it's not controlled by one person, so anyone could literally participate in the system. In the case of Bitcoin, at least, all it takes is you have to download a particular software. So what happens is, when you download a software, what you're doing is you're downloading certain sets of data. This data is actually distributed among everybody else that is also running the system, and everyone has the same data. Basically, it's not different. Well, that's how the software is basically communicating with each other, right? So it's of course it's digital, but it's also distributed. Um, and since everything is public, it can easily be verified, right? Like, since the data is available everywhere, any other user can just verify it by checking the blockchain that these people are running. And they realize that such a structure, or such a technology, can actually be used for money itself. Of course, there are a lot of other applications that we are going to go through maybe in the future, but since we are mostly discussing about the financial and the money aspect, we will look at it from the point of a transaction based system. So yeah, Vishnu, can you maybe go to the next one? Yeah, so this was basically the introduction of Bitcoin. It's called the Bitcoin White Paper. It came out in 2009. So this detailed how the Bitcoin system basically worked. So of course, it wasn't really called blockchain back then. Blockchain was more of a more recent term that came about. It was just called Bitcoin back then. So Bitcoin and blockchain are kind of synonymous with each other. As you can see, it clearly mentions that Bitcoin is a peer-to-peer electronic cash system. What does peer-to-peer mean? Well, peer-to-peer basically means it's one person to another person interacting directly. There are no third party, there are no middlemen in between. As we learned that banks basically acted as the intermediaries for payments back then. Today also, banks act as third parties, but there are also other kind of payment apps, right? Like, if I give example in India, like PhonePe or Paytm or Google Pay, they would all be third party intermediaries whom you are interacting with to basically make payments with other people. But Bitcoin was proposed as a solution where you wouldn't need third parties. You could directly send a payment from yourself to another person, and there wouldn't be another party involved in actually processing that, basically. So we can clearly see that the introduction talks more about it being a cash system. It doesn't talk about being, like an investment scheme where you can make a lot of money and get rich off of this and all that. It's just a payment system that was introduced to tackle the centralization and the problem of money being uh, the ability of it being able to be confiscated, basically. Of course, it's a bit more. It's a very long paper with more technicality, which you won't get into. Um, cool. Maybe we'll go to the next slide.
Yeah.
Yes. So there were certain properties that was core towards Bitcoin. If you actually go through the entire white paper, you will get some of it. I mean, if you guys are interested, you can check it out. But I'd like to say that it is it is really technical. So maybe you can just understand a little bit of it. Anyway, so trying to brief whatever was given in that white paper and what it has become now. It's the main aspect is that it's supposed to be peer-to-peer electronic cash. It's supposed to work as cash, which means you're supposed to use it for payments, right? Like you buy something, you pay with Bitcoin. You're paying someone salary, you pay it in Bitcoin. You're having a business, you want to accept payments for your products or services, you accept payment in Bitcoin. That was the entire concept behind Bitcoin. And well, why this? Again, we went through why you would use Bitcoin compared to other currencies, because well, it does not have a central authority, right? Uh, there is no there's no single government or a company or a person that's basically responsible for handling Bitcoin. Every single person who's involved in it are responsible. Of course, the rules are set in the software. And in order to change that, of course, every single participant has to agree. In that sense, it works similar to democracy, where majority, or at least the major majority, have to agree to changing something. So yeah, this system basically allows for not being introducing any kind of third parties, which means, well, if you compare your cash that you have today, like paper notes that you have today, versus your digital payment apps like Paytm or PhonePe. One difference you will find is that in cash, you actually hold it, right? Like in your wallet, like you have access to it anytime. Like you can just, and when you go to a shop and you make a payment with cash, again, that's a peer-to-peer transaction, because you are taking it out from your wallet and then you're giving it to the shopkeeper or whomever you're paying it to. So that's a peer-to-peer. There's no third party involved there. Like you're just directly transacting. But unlike that, your banks or the payment apps, you're basically requesting these third parties to send your money that they hold, to whoever is supposed to receive it. So as we see that you've not only given up your control, but also you need to ask permission just to send your own money. So that's why Bitcoin is called as electronic cash, because the way it works is it works like cash. So you get something called a wallet, right? And the Bitcoin is stored in your wallet. It's not stored in any software that somebody owns or something like that. And when you make a payment directly from your app to the other receiver's app directly. So this property is basically called as non-custodial, which means, or it's also called as self-custodial, which means you hold it. You don't let others hold it. Even though it's in the form of digital money, nobody else has to hold it. You yourself hold the money. Yeah, next slide, Vishnu. I think, I don't know how many of you guys were there for the previous one. So we did go through the properties of money, and we see that the similar properties are reflected in Bitcoin, right? So we know that there are certain properties that was very important for money to act as money. So we're going to go through some of the properties that Bitcoin itself has that satisfies for it to be a good form of money. The main thing that we did talk about is that the main property is for something to be a money, it should be a really good medium of exchange, which means you should be able to use it for payments easily. You should be able to exchange it with another asset very easily. And we know that since digital form of payments are quite easy, I mean, you would just need like a phone and an app today just to make a payment. We know that Bitcoin really does act as um, a good medium of exchange. Apart from that, of course, the more people that are using it, it tends to hold the value that it has, right? If everything starts being priced in Bitcoin, well, one Bitcoin will always be one Bitcoin, right? Like it doesn't reduce over time. It does not lose its own value. So it is also a good store of value in that sense. And again, last time we went through the problem of inflation when it comes to other currencies, where especially with paper currency, it tends to the governments or central banks tend to inflate it a lot, which means they print a lot more money and push it into the circulation, which causes the prices of everything to rise. So we have seen that that is actually a problem, and money should actually be quite limited. I think, as I can remember from the previous this one video, I think Vishnu mentioned that you cannot use leaves in a forest as currency because there's just so much supply of it. It just does not make sense. Or you cannot use shells as a currency in coastal regions or in the beach regions because it's available in abundance, right? Uh, so this is a very important property of money, that it should not be unlimited. There should be limited money, and then every other asset should actually be valued against that limited money. So what Bitcoin has introduced is, for the first time, it's introduced a digital way to limit something's supply. So Bitcoin technically has a fixed supply of only 21 million Bitcoins. Of course, it has decimals, which means it can be divided. Uh, but yeah, I mean, you can't really have, there's no person or there's no central bank that can just keep printing more Bitcoins to inflate the system. So this is a really good property that is being introduced, which is very hard to change. Of course, you have to convince literally millions of people just to be able to change that aspect. Um, Now it does have, well, of course, Bitcoin did not start off with 21 million as the starting point. It started with 0 coins in circulation. But the way the system was built is, over time, there would be more Bitcoins released. But at the end, there would only be 21 million Bitcoins. There wouldn't be more than that. And the way that was basically introduced, I think we'll go through how the rewarding thing works. But yeah, so after some time, there is some Bitcoin released, but which reduces over time. So it reduces by 50% for every 4 years. So this particular property kind of mimics gold in a very similar way, which means, as we know that if you start mining gold, since there is limited amount of gold, it gets harder and harder to find the last bit of gold, right? So that is the same property that is introduced in Bitcoin as well. So that's one of the reasons why people do mention Bitcoin as digital gold. Um, and settlement just means when you make a payment, when does it actually get confirmed, right? So for example, if you pay somebody in cash, well, that's instant confirmation, like that person already has the cash in his hand. But if you use something like a debit card or credit card, I should say, usually the settlement time is a month, right? So yeah, the payment might happen right then, but the merchant or the store does not actually get confirmation that the money has come in uh, until almost a month later. So something like that exists in Bitcoin as well. So usually it takes about 10 minutes to get the confirmation that the money has been received. And that is quite average. That's actually average throughout its history, which means sometimes it could take lesser, sometimes it could take more, but it always averages out to taking about 10 minutes to confirm. Now, Bitcoin does work on this system called as proof of work. Now, what does this mean? Well, I'll take an example of a bank, right? So what do banks do? Well, today we know that once you deposit your money and then when you transact, it's up to the bank to confirm that transaction, right? So the bank has to confirm that you are spending the money that you have. So for example, if you have deposited 1,000 rupees into the bank, you cannot spend 2,000 rupees. And if you try to spend 2,000, it's up to the bank to do the, basically it's a work that they're doing to check that you have, whether you have 2,000 rupees. And if you don't, well, you should not be able to spend it, right? So in a decentralized system, who's really there to check that, right? um, since there is no central authority like a bank or a person or a company that's checking transactions, who's really verifying that when you send a Bitcoin transaction, you actually own that Bitcoin, that amount of Bitcoin. So that is where a concept called proof of work is introduced. So basically, in the beginning, I said that anybody could run the Bitcoin system. So what happens is there's a bunch of people called the miners, right? Again, this could be anyone. Anyone download the software. You could also mine Bitcoin. So what happens with mining is all the miners are basically verifying all the transactions that are taking place in the Bitcoin network. So when person A makes a Bitcoin transaction to person B, that is verified by well, all the miners in the world. And as I said, anybody could become a miner. If you ask me what the mining process itself is, well, it's just it's more of a it's called cryptography. Basically, it's just solving a problem, right? So the problem kind of matches the transaction that you're doing. So it's a very difficult thing to do in terms of computing. So what happens is over time it gets harder and harder. So what happens with this is when a transaction has been made, well, of course, you should make sure that the history of that exists, right? So, for example, if a person sends some.
Wait, fix that. Yeah, go ahead, Rohit.
Yeah, all right. Yeah, so basically what the miners are doing are they're basically just processing transactions. Now you could ask, why are they doing this, right? So this ties down to the creation of Bitcoin itself. So for example, when a miner does let's say it's called finding a block. So back to the concept of blockchains, the transactions that we make, right, are put in a concept called as a block. A block, you can just think of it as just data, that's it, right? Actually, I will give you an analogy with your bank passbooks. So everybody here must have a bank account, hence you must have also got a passbook, right? You can think of Bitcoin as a global passbook. Now every single user of a bank gets their own passbook, right? Unlike that, in Bitcoin, it is a global passbook. There's only one passbook that everyone has, and it's the same passbook, right? So when let's say I send a transaction to Vishnu, I update my passbook saying I've sent, well, this much amount to Vishnu. But everybody else running the Bitcoin system, or the Bitcoin passbook, I should say, also updates the same thing. So everyone in the system has the same set of transactions in their passbook. And you can think of one block in a blockchain as one page in a passbook, right? So one page can have only that much amount of transactions written on it. Just like that, one block can have X amount of transactions written on that block. So let's say whoever completes that one page, as I said, anybody can do it. Whoever completes that one page of transactions, they get rewarded some Bitcoin as a reward for having done that work. So this is where the concept of proof of work is tied to the creation of new Bitcoin in the system. Okay, since we covered a lot, Vishnu, should we ask the questions now or in the end?
We can ask in the end.
Okay, cool. All right, hope everybody got that. It was a bit complex, but yeah, you can just think of it as, just visualize it as a passbook, right? Like, the blockchain is Bitcoin is this passbook, but everybody has the same passbook, and our transactions are written on that passbook. Yes. So yeah, maybe we can go to the next slide. Yeah. So now, if you ask how do I get into the Bitcoin system, right? Like, where do I hold it? Well, just like there are electronic wallets like Paytm or PhonePe wallet, there are Bitcoin wallets as well, which basically hold your Bitcoin. Again, unlike those apps where they hold your money in the wallet, you get to hold your own money. That's the difference. So that's where the first concept of non-custodialness comes from. So again, you get to hold your own money, and most of the wallets are actually open source, which means unlike you can't really see the code that runs Paytm or PhonePe. It's all proprietary, right? You can't really check what's actually happening behind the scenes. But most of the cryptocurrency, or I would say Bitcoin wallets, are all open, so you can just, anybody who has knowledge in coding could just go check the code and make sure that there's nothing nefarious taking place within the app. So you could ask, what if I uninstall the app or something? Like, what happens to the funds, right? Well, technically, the way it works is just like your email has your email and a password. The wallets also come with an inbuilt password. Usually it is called a backup phrase. So usually people say you have to back up your wallet, right? So because it's not centralized, there is no login system as such. There's no account that you're opening. But you do get like a bunch of random words which act as your wallet's password. So that is in the crypto world or in the Bitcoin world, it's very important to store that safely, because that itself acts as your gate to your wallet. It acts as the gate basically to your funds. So if you lose access to the backup, you will also lose access to your wallet. Again, because not a third party is not really storing your money. They can't really recover it for you. It's up to yourself to be responsible and take care of your wallet. Just like a physical wallet, right? Like, you cannot just leave your physical wallet, anywhere and then expect it not to be taken by someone. You have to be careful. You have to make sure it's safe. It works a very similar way in the Bitcoin world as well. You have to be very responsible. You have to keep it safely. And yeah, we have seen that many banks usually tend to get hacked. Of course, we don't really hear about it because it's not really reported that well. But there's actually, I think, a website where you can see all the banks that have been hacked and all the millions of dollars or rupees that have been lost. That's because hackers tend to hack wherever there is money, right? So since a bank or a payment app holds all the money, yeah, they are prone to attack. But in this case, it's an individual wallets, right? Everybody's money in their own wallets. So it's really hard to hack every single individual out there compared to hacking just one single entity. So that's another security that you get from using a Bitcoin wallet. And usually they're not really connected to any third-party institutions. So now there are wallets that are custodial, which means there are companies that provide your wallet, but then they hold your funds. So you should try to avoid those kind. Of course, if you have any questions about which kind they are, we are happy to help you with that. But make sure you do not use those kind of wallets. Make sure you use wallets that are actually give you that backup phrase, which actually let you hold your own funds. So yeah, some of the examples are like, there's Zapit, there's the Bitcoin.com wallet, there's Coinomi wallet, there's Exodus wallet. Well, some of the examples for custodial ones are maybe like Coinbase or blockchain or something like that. Yeah, Vishnu, can go to the next. Okay. Now, how do you get it in the first place, right? Like, how do you acquire Bitcoin if you don't have it? Well, there are institutions, either they are centralized or decentralized, called exchanges, where you can buy or sell Bitcoin if you want to, right? Now, if you want to trade Bitcoin, I wouldn't suggest regular people to get into trading. Again, Bitcoin is just a currency, right? Like, it acts as a payment tool. Though I think might have heard of it that it's an investment thing, it's a trading thing. It's very similar to rupees or dollars or pounds or yen or any currency like that. So there are forex traders. Like there are people who trade dollars to rupees or dollars to pounds, and then they do make money from that. But as you know, that is not the main use case for those currencies, right? You don't use it for that. Like you may be using it for paying for things or for to accept payment or something like that. Just like that, yes, you could trade Bitcoin as well, but that's not its main use case. Its main use case is to be used as a payment mechanism. It's to be used as a payment tool. But of course, you could use exchanges to trade or to even just acquire Bitcoin to be able to spend it on a daily basis. But yeah, if you do want to trade, make sure you do it safely, because it's very volatile. The prices tend to go up and down a lot compared to other assets. And also know that exchanges, especially the trading ones, are all custodial, which means they hold the Bitcoin. So again, it's another reason why you probably shouldn't be keeping your funds in an exchange unless you are actually trading the asset. If you're just acquiring the asset, once you buy it from an exchange, make sure you remove it and put it into a wallet, which again you have control over. And as I just mentioned in the previous slide, because these institutions also hold all the users' money, since they're centralized, they are prone to hacks. Like exchanges do get hacked a lot. Like there are a lot of instances where cryptocurrency exchanges have been hacked. So that's why it's not really safe to keep it in an exchange. Make sure you keep the funds in a wallet. And yeah, if you're trading, make sure you choose an exchange that has a lot of users and a lot of people trading in it. It's called having a high volume, because you would actually get a better price in those kind of exchanges. Now, some exchanges that I could tell you, like a centralized exchange in India, is there's CoinDCX, there is WazirX, there is BitBNS. Though I think they are having some issues right now, but yeah, some international exchanges you could use Binance or CoinEx or your SiteShift. We will give you links if you really want to get into this, but yeah, I'm just mentioning it for now. But yeah, so generally the main thing that we generally talk about, or we try to get people to do, is spending and also earning in crypto. You don't have to buy and sell crypto, that's just for traders, but it's far easier to spend and earn. One thing is you don't have to go through the entire KYC process with this exchange, where you're giving up your data to all these companies, which would end up selling them in the market or to the government or something like that. So if you really want Bitcoin, instead of buying it, it's preferable that you earn it, which means you start accepting crypto. If you're a business, you already accept maybe debit cards, maybe cash, maybe UPI or something like that. You could also add another payment mechanism. So you could add Bitcoin or other cryptos as well. And if you're going to spend on a day-to-day basis, we would, again, if you want a more sustainable form of finance or money, it's better to start spending also in crypto. Yes, at the moment it's a bit more volatile. That's because not many people are using it for spending. That's why. The more people that start using it, it tends to become less volatile, and it does get more stable over time. So yeah, definitely, if you want help in how to accept crypto in your business, or whatever you do, or if you want to learn how to start spending, we can you can definitely contact Vishnu or me. We'll help you out with that. But yeah, the idea is basically to start earning, and earning by accepting crypto, and spending by, of course, paying for things in crypto. And make sure you hold it in your wallet. That's a very important thing. And don't go all in, right? Like don't put all your wealth into crypto. Start by putting in what you can afford to lose, or maybe a small bit. If you're a business, again, you could put a small bit into it and check how it's working out for you. If you're working for a salary, you could put a small portion, a small percentage of your salary into crypto and start using it that way. But make sure it's for long term. It's not something that you get in and then out of, right? We are talking about this being the future of money. So make sure you put in a little by little, but also think of it as a long-term thing. In the short term, of course, the prices may go up and down, so you don't have to worry about that. In the long term, we believe that we are building tools that make it more usable and yeah, get more and more people involved in this. Yeah. Vishnu, are we getting into dApps in this talk itself?
Not really. We can skip this part.
Okay.
Yeah.
I guess this also is a bit more technical.
Yeah. Yeah, cool. And then we can
Okay.
probably just get into questions and yeah.
Sure. Yeah, I guess we'll stop here for now. And I might have gone over some things fast, or maybe you guys didn't understand a particular bit. So we're happy to go through, any of the slide or any of the concept in more detail. Yeah, if you have any questions, please feel free, guys.
Yeah, hi Romit. I wanted to ask a question.
Sure, go ahead.
So, based on what you said, so I was intrigued about the variance in the value of the Bitcoin. Why would the value of the Bitcoin change so often? And how I visualize that is, so if more people are accepting and transacting in Bitcoin, it is becoming more widely accepted medium of exchange of value. So then the value would go up, and if there is a perception that it is going down, then the value would go down. Is that what is affecting the value, or are there other factors affecting the value of the Bitcoin? That is one. And then I have another question.
Okay, maybe I'll address the first one first. So right now, what we see in the entire cryptocurrency market is that it's more than 95% is just speculation, which means people are just speculating that the price is going to go up and they're buying. It's not a good thing, of course, because there is no real utility that's backing it. That is exactly what we are trying to do. We're trying to get people to actually use it and give it more utility, right? It's supposed to be used as payment. It's not supposed to be used as an investment or a trading tool. But unfortunately, some people, have realized that because the asset is small, even small bits of money can change the percentage a lot, right? If you take a look at the rupee or the dollar, the market cap or the entire value is in trillions of dollars, right? So to move it, you would need trillions of dollars to move, 1 or 2% or 5% or something like that. But since Bitcoin started off being just $1 million asset or even at $1 billion asset, it's quite easy to move its price up or down. So the more people that start getting into it, right, start using it in their day-to-day life, and when Bitcoin is associated with a lot of value in terms of other assets as well, it will get harder and harder to move its price, whether it's up or down.
So what do you mean when you say that Bitcoin started as $1 billion asset?
No, it started off with zero. It started off with zero, but it started mattering only when it hit like $1 million or $1 billion in value, right? Until then, nobody really cared that much about it. It was a very small group of people that cared about it.
So essentially what you're saying is when it started mattering, so what essentially is driving the value of the Bitcoin right now is mostly speculation and
Yes.
very less of a real application in real world, exchange of value.
Yes. Today, the only thing that's driving its price is speculation, nothing else.
Okay.
Which is unfortunate. That's not what we want. Bitcoin
because
is a very great tool.
even
right?
if I would want to get into crypto as a decentralized currency, this would be very scary for me that right now
Yes.
it is a very speculative currency, because speculations can really go in either direction.
Yes.
So
That's true.
now on the now this is a hypothetical scenario. If it is very, very speculative right now, one is I wait for the entire world to start accepting it and start using it. And the way I am looking at my world is that I would want to live in communities, and we are hoping to have our own small community in the hills pretty soon. And we are a group of people,
Mhm.
and we would want to exchange value within us. So, is
Mhm.
there a way that we could already start using Bitcoin within our community, given that it is decentralized, it doesn't have any institution, it doesn't have any centralized, controlling mechanism? Can I
Mhm.
have it, within the community or within a set of communities, within a set of people? Can we have it as a medium of exchange of value where the people are using it in their day-to-day life, and thus the way, the fluctuation is not so much, and it is a more a more tangible and more reliable medium of exchange? Can that scenario be created, or would it have dependence again on how the entire world is looking at it?
Okay, two things I'll mention in this, right? The first is you can use it, right? Like even today, you can just start using it. You can just download a wallet. You can buy some Bitcoin and start using it for payments, right? You could convince others to start accepting it, and you guys could start using it. But a small community using it will not really affect its volatility a lot, right? Because the market cap or the entire market is pretty huge, and there are a lot of players with a lot of money that's involved in this. The price is going to fluctuate a lot. You're not going to have a rather stable exchange until the majority of the world, or at least a huge chunk of the world, starts to use it in payments. That's first part. The second point is that now in the crypto technologies, there's something called a stable coin as well, which means you can get a stable value, let's say the dollar value or the rupee value, but it's in the form of crypto, which means it's not really controlled. Well, again, that also there are two forms, which is it could be controlled by a company, or it couldn't. It could be a decentralized one as well. Now, if you want to use a cryptocurrency, but you want it to be decentralized and stable, you could use a decentralized stablecoin that still works.
We could use a what? I missed the
A
last part.
decentralized stablecoin. So a
Okay, so there is
stablecoin is
something
basically
called a decentralized stablecoin.
yes. So decentralized stablecoin is basically a cryptocurrency that holds a stable value, and but the stable value is linked to any of the traditional currency ones. For example, it could be linked to the dollar, so it always has the dollar value. It doesn't go up or down, but it sticks to the dollar value, which means if you're using it for, if you're, let's say, trying to exchange it for rupees, then the dollar to rupee value will matter. That of
And
course
then
keeps
there is,
changing.
in that case, can it be pegged to gold as well?
Yes, there is a cryptocurrency that's also, well, so-called pegged to gold, but we don't really know. The problem is we don't really have the transparency here, right? So anything that's pegged here goes back to the same issue where, when banks supposedly held gold and then they issued notes, these companies are doing the same thing, right? They hold the gold and then they're issuing coins, but we don't really know if they are holding as much gold as they're issuing the coins. That's the problem.
So I think it's more complex than I can understand in a short call.
Yeah, it's definitely a very complicated thing. So it's easier to start getting into it, right? Like you download a wallet, you start off with like 100 rupees or something, which you can afford to lose. It's not a big amount, and start seeing how it works. See how it works out for you, and then over time you add a bit more and bit more and bit more. If it's not working out for you,
So,
then you
so,
stop.
so
And then
sorry to interrupt you there. Like
sure,
you
sure.
said, there is a cryptocurrency which is backed by gold.
Yes.
So I'm again coming back to the scenario of a community. Let's say we are a
Mhm.
community of 100 people, and we
Mhm.
decide to use cryptocurrency.
Mhm.
And I mean, I'm just thinking off my head. We create a currency backed by gold, and we back it by real gold.
Mhm.
Uh, we, use our money, the money that we have, and buy gold. I don't know how exactly we would do that. And then we
Mhm.
create that currency, and then we use that currency for our own internal transactions. And then, of course, that currency is available globally for other people to buy into. Can that kind of a scenario also play out?
Yes, you can definitely do that. But we go back to the same issue where if you are issuing this, if you are creating this, you are a central entity, right? Which means there are two issues. One is you may be good, but let's say the people coming after you may not be that good, or people who are coming next may not be good, or even you, somebody within your community may have malicious intention and they could cause some sort of an issue. Or if the government does not really like that you're competing with the rupee, they could just shut you down. Like they could really come and just shut down your system. So
Oh,
that's
they
the
can
problem
do
with
that.
centralized systems. So in order for it to be decentralized, it has to be a system where millions of people are running the system and it cannot be shut down easily. So that's exactly why Bitcoin has survived till now, because even though it goes against the largest currencies of the world, um, I mean, it's decentralized, so it's really hard to shut it down.
So thank you so
Maybe
much,
if I
Rohit.
can
That's
give
Sure.
one more perspective over here, on the topic of volatility, so one of the things that you need to understand is that, as Romit mentioned, that right now the the value of these systems is so low compared to the existing legacy system, right? Which is that if we talk about like euros and yens and dollars and things like that, we're talking about like, trillions and trillions of dollars. And especially if you even start looking into like the bond market, and then you look into like derivatives and all of that stuff, there's like a huge amount of like liquidity that is sloshing around in that market. By comparison, crypto is still like really small, which is why it fluctuates so much up and down. But if we can predict that this is something that is going to have the support of more and more people over time, we can kind of assess that the general trajectory is that this pool is going to just get bigger in size, right? And what
right.
that would mean is, like, say for example, if you got involved in say Bitcoin in 2010 or something, or 2011 or something like that, and you had the same community of 100 people, and you decided that, okay, I'm going to start accepting this, and the volatility is still pretty high, right? Where maybe you invested, like, you had some potatoes worth 1,000 rupees, and then you gave these potatoes to somebody, and then maybe that person paid you say 50 bitcoins for say 5 or 10 kgs or 30 kgs of potatoes, something like that, because maybe at that point, like, Bitcoin was worth only maybe 2 rupees or 5 rupees or something like that, right? And it still had like a crazy amount of volatility, where maybe today you paid 50 bitcoins for that, and it was worth like 5 rupees, and maybe 3 months later it's worth only 2 rupees, right? And you're like, oh my god, I lost like 60% of my value. But the thing is, in the long run, if you see, it has gone from being worth 2 rupees and 5 rupees to being worth like 1,000 rupees, 10,000 rupees, lakh, 10 lakh, and I don't know, it's just doing all these crazy things, right? That's because the global liquidity pool is infinite in nature, and the amount of dollars and euros and yens are just constantly increasing. But this one is finite in nature, right? And so and also as more and more people start to use it, its valuation goes up. And so, which is where, like, a community which actually starts using this before other communities, just by virtue of being involved in this, would actually end up getting like a lot more value in time. Like, now imagine, think of it in a country level, right? So where you have say some small island, right? uh, uh, which is already starts accepting this as a mode of payment, quite universally within their island. And maybe there's a small island which just has maybe 500,000 people or something like that, right? As compared to another country where which is still using fiat money. And if you look at the trajectory of how these two will kind of play out, this small country which is using say Bitcoin or something like Bitcoin Cash, like, over time, like, all of the citizens of this country would get enriched, as compared to another country like, say, Venezuela or Argentina or something like that, where they're still using the fiat money of the centralized system, which is just inflating it out like crazy. You see that a majority of the people of that country end up losing most of their value, right? So, which is where, like, in a longer term, this makes a lot more sense. So I hope this also kind of answers the question a bit.
Yeah, thanks Vishnu for your inputs. So I just wanted to add here that in the short term, what my where I am not able to put my head around it is in the short term, if somebody decides to start using it, the frequent change in value, and given that it is changing so rapidly, I really don't know how rapidly that is happening. Would that make it practical for people to use it? Like, for example, today they go out and to buy potatoes, they have, 1 kilo potato is for 2 Bitcoins, and tomorrow that same 1 kilo potato is 20 Bitcoins, or day after tomorrow that same 1 kilo potato is for, for zero point 0.1 Bitcoins. If that kind of, crazy change in value and fluctuation is happening every day, that may not make it a very practical way to transact on a day-to-day basis.
Okay, so see, that is not the kind of fluctuation that we do have. Like, I understand that it is quite volatile, but you don't have an extent where, say for a certain commodity, like let's say potatoes, it's like now you have to give 10x the number of Bitcoins, like, 3 days from now, and then, like a week from now, you give like 0.1x, right? So because that's like almost a fluctuation of like 100x between like this day and that day, right? So that's not the kind of thing that we do have. uh, I do understand that it's the kind of fluctuation that we are seeing is that maybe it goes down from, say, something like okay, it went up like $60,000, and then from there it has come down to less than $20,000, right? So it's kind of lost like 1/3 of its value in that sense. Maybe it goes more, maybe it becomes like 1/5 of its value, right? And then it also at some point it goes like up 5x or 10x in value. So that is the kind of fluctuation that is currently there. And so of course, like, if you transition your whole life to this immediately, then probably it might be like really hard to work your way around it. But on a very practical level, people have already been using it for more than 10 years now for different kind of use cases, like even for like international payments and things like that, where maybe there are merchants in different parts of the world who have been open to accepting this. And it's not like you transition your whole life or your whole business into this. Maybe there is somebody, in some island country, and they're making some fancy soap and they're willing to sell it globally. Maybe you're still, getting like 80-90% of your volume of your business from, say, traditional currencies. But maybe if you even get 10% of it from a new platform, like something like, say, cryptocurrencies, that wouldn't really hurt you so much, because even if you have like crazy volatility in, say, maybe 10% of your earnings, that wouldn't really hurt you, that, you cannot like live with yourself anymore for this kind of a thing, right? So even if it loses 50% of value, that's just like a 5% net worth fluctuation for you, right? And that way it can still, like, you start to experience it.
Sure.
Okay, I have a question for Romit. So, okay, while let's say after having understood all of these things, like I come to the conclusion that yes, crypto is the future, right? And now, if I look at a parallel in history, let's say if I was, say, in the late 90s or whatever, no, it's like, and let's say if I look at the world and I've come to the conclusion that yes, internet is here to stay, and the internet is going to radically transform the world. But at that time, I see there are companies like, dog.com, and there's like other such things which are kind of floating around. Now, how do I come to the conclusion that, which companies will actually radically transform the world? And by that analogy, when I'm coming to cryptocurrencies, like, okay, fine, let's say Bitcoin came around in 2009 and it kind of ushered in this really new platform and this really new technology system. But as actually a global peer-to-peer cash system, how do I know that Bitcoin will actually deliver on that promise, or maybe something else is going to deliver on that promise?
Sure. Okay. So of course, nobody has unlimited resources to do research for the entire world. So there's always going to be competition, right? There's always going to be there's always going to be competition. Is it coming from my side?
Yeah, I think there's some disturbance on your end.
No, I don't think it's my end.
Oh, okay, cool. No, it's
Yeah,
fine.
okay. I think it's fine. Yeah, so as I said, there are going to be competing cryptocurrencies. There are going to be competing companies all the time, right? One thing is it doing what it's intended? Is it solving its intended purpose, right? Is it following its intended purpose? That's one of the key things to notice. And if you're talking about Bitcoin in this case, and if you're talking about a peer-to-peer electronic cash, well, there are certain properties that make cash better, right? For example, transaction speed, like how fast are transactions? Well, the currencies with the fastest transactions tend to have better experience for its users. So any currency that has a fast or near instant transaction will tend to do better. That's one aspect that we can do. The other aspect is the fees. How much fees are users being charged for each transaction, right? Um, Now, of course, when we mentioned Bitcoin, I was talking more about the idea and not the coin itself. And we know that there are multiple forms of Bitcoin and there are multiple forms of cryptocurrencies. And each cryptocurrency has their own transaction fees. For example, the BTC version has one of the highest fees. You could easily pay, even now, I think it's close to like 10, 15 rupees per transaction, which is quite high. Day-to-day payment, you don't really pay that high transaction fees for anything. So we know that BTC is not going to be used for payments anytime soon unless that issue is fixed. And how do we know if issues are being fixed? Well, we look at the development that's taking place, right? We look at how big the team is. In the traditional sense, if we look at Google or Facebook, we see that every year they have one or two conferences where they reveal what they're working on, right? They're working on a new product, they're working on a new software, they're working on new watch or new phone. They keep revealing it. So we are seeing that, okay, the development is taking place. So we know that Apple is going to survive because they're doing things that people want, or they're at least building things that they're getting people to use it. Same with Google or something like that. And we have seen that companies that didn't really do that didn't really survive in the market, right? Like the Blackberries or the Nokias or something like that. They didn't really continue innovating in the direction that the entire industry was headed. It applies to cryptos as well. Um, as I said, fees, transaction speeds. How many people, how many merchants, or how many stores are actually accepting Bitcoin? That's another important thing, right? If you want to be able to spend Bitcoin, well, you need people to also accept it. So the coins that are working on getting more people to start using it, right, adopting those merchants or stores, those currencies will tend to do good. We know that in the entire world, Bitcoin Cash is basically the king for merchant adoption. Like no other cryptocurrency has got that much adoption as much as Bitcoin Cash is. But if you take a look at just South America, there's a cryptocurrency called Dash that is really doing much better than any other currency, right? Because it's working out well for them. Um, yeah, so if you take a look at any kind of decentralized company or decentralized currency, or something like that, Ethereum is the most widely used currency for that, because Ethereum has the right tools to be able to build decentralized applications. So yeah, there are a lot of metrics, but unfortunately we don't have enough resources to keep track of everything. So there's only so much that we can keep a track of, and within that we can measure which is doing better and which is not. So of course there are websites where you can check the top projects in each of the domain. That gives you a glimpse of, okay, how many people are using it, how big is the market for this, and things like that. But of course that could change any day. So with a new product that may come into the market and just steal all their users, right? Um, yeah, I
So
guess
suppose
that's
suppose I wanted to like check this out for myself, right? Like I want to do my own research before I. Okay. Actually, my PC is kind of running low on battery, and I'm like sitting in a car. So maybe I think this is like that's a good signal from the universe that I think we're good for now. What do you say, Romit? I don't think I have
Yeah,
any other
I'm
option,
good.
but I'll use the saving on this one.
Unless others have questions.